we can clearly see that after the 2017 high, and by the way, one of the things that makes me think the 2017 high is not the bottom is that almost everyone is saying it's the bottom, right? I mean, as we got closer, I was calling the 20,000 correction back when we were 60, 68,000. But then as we got to like 30, I started seeing it everywhere. Oh, we're going to 2017 highs. This is where we're going to bottom out. This will be the greatest buying opportunity. When everyone's saying something, it almost is never. So let's take a look at the chart here on Bitcoin and see what we have. So right now, we're still hovering around that 2017 high. That was my original call, as you know, that we would that was at least my minimum target. We have achieved that on Bitcoin. So my guess is near term. And when I say near term, I'm talking the next 2 to 4 weeks. I think you probably see a bounce in Bitcoin at minimum back to 25,500. Maybe as high as resistance here around 28.5. That's exactly it, right? So it's important to remember that funds, hedge funds, and big funds out there, we always think of them, oh, they're institutions, they're ahead of the crowd, but a lot of them have to be chasers as well because they have to show their clients that they're in the hot thing. So we know that the tech stocks topped out kind of late last year, early this year. And then there was this massive rotation into oil. Oil was the new thing to be in. All the analysts, all the talking heads were all about, oh, oil, that's going to be the safe place to be. Oil's going to go to $150 to $200 a barrel. And I came out and said to you guys out there, I said, be very careful here. Oil's probably topped at 130 when Russia invaded, and you're going to see downside. And I think today we saw a flush below $100 a barrel, almost 10% drop in oil. And it's important to recognize you had quarter end, right? So at the end of a quarter, all the big funds, they want to send those statements out to their clients and show, hey, we were in Exxon for the quarter, we were in oil, we were in copper, we were in all these other things. And then at the new quarter, they say to themselves, okay, we got to get out of this stuff now because it's way too overdone. With a recession potentially coming, these things could crash. And so you see this kind of action where they all run for the exits at once, and we get these massive down moves at the starts of these quarters. I think at least in a market like this that we're in, where it's not all, oh my goodness, we're going to go into a Great Depression. We're not at that point yet. Then funds are always looking for, okay, where can we rotate money to get exposure and potential profits, right? So initially it was tech stocks, then it rotated into ag stocks and oil stocks, and we saw those doing well. Now, if you've noticed, we've seen this kind of rollover in oil and ag stocks, and now it's back to tech stocks. Tech stocks had a great day today. We saw initially a gap lower in the markets, and then the NASDAQ stocks just started to rip higher. So we're seeing this money just rotate like round in a round circle, round and round. And that's the way it works in this kind of early to mid cycle bear market. Now, we will eventually get to a point late in the cycle where it's sell everything, where total panic comes out, but we're not at that point. And remember, funds, big money always needs to try to be invested because they're worried if they're not invested, their clients are going to find someone who does invest all of the money to get that return. I'm a big believer that sometimes being in cash is the best thing to do. We've seen the dollar have so much strength recently. It's actually been a great trade to be in cash. But you have to understand from a portfolio manager's perspective, they've always got to try to be in something. I think for a bottom, at least in the overall stock market, right? And we could talk about crypto. This is going to apply to crypto. It kind of applies to everything. Is that you go through those stages of grief, right? And it's very applicable. So initially there's denial, then you finally go down until you get to acceptance. And when you get to acceptance, that's when the bottom will be put in. And again, we're not there yet, not on the stock market, unfortunately not in crypto, although I do think crypto is closer to that than the stock market in terms of how much decline we've seen in Bitcoin and other altcoins. So I do think we're getting there, but it's not quite there yet. You will know when there's like, you hear blood in the streets, that will be the case. Not literal blood in the streets, but it's more like everyone is just so upset and so frustrated with the markets and basically throws their hands up in the air and says, I don't even want to look at the stock market anymore. That's when you put in a bottom. Thesis before the end of 2021, before the Fed started pulling back on their printing, it was don't fight the Fed, which was correct. But one of the things that we find out about human nature, and this is the psychology of an investor, is that once the thesis changes and goes against what you want to do, you kind of change your thinking. And you can't do that in trading, just like in life. you have to say, okay, well, the Fed is telling us they're pulling back on all this money printing. So really, don't fight the Fed means get the heck out of the markets or go short the markets. But people are so conditioned to say, well, I just want to make money. So I'm going to say, well, it doesn't matter now what the Fed says. I'm gonna just go along anyways, or I'm going to buy the dips anyways because it worked. But we really have to take the cues from what the Federal Reserve has said and abide by them. Yeah, so let's take a look at the chart here on Bitcoin and see what we have. So right now we're still hovering around that 2017 high. That was my original call, as you know, that we would that was at least my minimum target. We have achieved that on Bitcoin. So my guess is near term. And when I say near term, I'm talking the next 2 to 4 weeks. I think you probably see a bounce in Bitcoin at minimum back to 25,500, maybe as high as resistance here around 28.5. But I do still think there's more downside. One of the key factors that's bothered me about the crypto markets is that it's so representative and identical to the .coms. And you haven't seen that flush out. Amazon went from $112 down to $6 back then. That's a 95% decline. I'm not sure if Bitcoin will drop that much, but I think you got to at least do your 80 to 85% that a normal bear cycle in Bitcoin does. And you also have to wipe out more coins. All right, there are way too many. There's still like tens of thousands of coins out there. Even after Terra Luna kind of blew up, we've seen Celsius, which again, that's had a lot of problems. That's the beginning stages of what the .com bubble went through to bottom, but you have to see more of that. To me, that means that we haven't bottomed yet. We'll get a short-term bounce, and then my next downside target is 12 to 13,000. How I come up with these targets. So number one, if we look at the chart here, we can clearly see that after the 2017 high, and by the way, one of the things that makes me think the 2017 high is not the bottom is that almost everyone is saying it's the bottom, right? I mean, as we got closer, I was calling the 20,000 correction back when we were 60, 68,000. But then as we got to like 30, I started seeing it everywhere. Oh, we're going to 2017 highs. This is where we're going to bottom out. This will be the greatest buying opportunity. When everyone's saying something, it almost is never the case, right? So that alone is making me think it's going lower. And then we can look at this area here, right? There's just a ton of major support between 13 and 12,000. So that's part of it. And then let me show you this. This is a really cool tactic in technical analysis. It's called a measured move. So if we take this high to this low, which was basically a straight fall down, we then had this consolidation, right? So you had about 3 months of a parallel consolidation. And then basically from this high, if you take the same distance as that first move and we drop it down, you basically get 12,000. So this distance with this distance is identical. And that gives me also a calculated target to 12 to 13,000. Now, it doesn't guarantee Bitcoin will stop there, but it gives me a good multi-factor analysis technique to think that that could be a level where it has a chance to fully bottom out. My first target was 20,000. I made a commitment to myself to not buy until we at least pierced it. But at the same time, no trader knows the future. No trader is always going to be right 100% of the time. I certainly am not. So what I understand is that historically, if I slowly accumulate, overall, I gain exposure if it doesn't get down to, let's say, 12,000, but also by dollar cost averaging in, if it does go there, then maybe my average is around 15,000. And when it runs back to 60 to 65 or 70 or 100, I'm in a great position at that point. So it's a way to kind of understand and be humble enough. And God knows I've been humbled by the market so many times in my career. It's to understand that you're never going to be always right. So why even mess with it? Why even say, oh, well, I'll only buy at 12,000. Let me start at 19,000, 1/6 position. Every 2 to 3,000, I'll buy another 1/6. That even allows for me to buy below 12, that into the sub 10,000 range. And that's what I want to do. I'm not trying to pick an exact bottom. I'm just trying to put myself in a longer term position for big gains when we do get the turnaround.